A very good afternoon, everyone. We welcome you all to the ZenTax Talks. So today is the 23rd week we've been continuously holding webinars. Thank you each and every participants for that. Continuing from the last two sessions, today we'll be having discussion on one of the most important and crucial aspect in GST, that is input tax credit, and that is being blocked. So for the past two sessions, we have divided this into three parts. And for the past two sessions, we've been discussing on certain clauses. And on the balance clauses, we'll have a discussion today. So before going deep into the remaining clauses, let me first brush up on the last 2 weeks where we had a discussion on the clauses A, B, C, and D. So going forward, we all know the conditions of the eligibility of ITC that has been prescribed in the section 16.2. So if all of those conditions are satisfied, we can avail the ITC. So in spite of that, even though if ITC is eligible, certain input tax credits are blocked, which has been prescribed in the section 17, subsection 5. So under that, the first is, that is clause A, talks about the ITC on motor vehicles. So if we see ITC on motor vehicles, that is motor vehicles, even though if it is owned or hired, we can split it into two. That is the motor vehicles that is used for the transportation of goods and that is used for the transportation of passengers. For a business, if it is used for the transportation of goods, it is straight away, that is ITC is eligible. But it is for transportation of passengers, we can again split it into two, as it has been prescribed under the section, the number of persons, passengers as 13. So if the passengers is more than 13, then ITC is eligible. But if the number of passengers, that is the seating capacity of your motor vehicle, is less than 13, then in such situations, ITC is not eligible, it is blocked. But even though if it is like that, there are three other conditions. If it is used for making those supplies, then ITC is eligible for that. If it is the motor vehicles, if it is used for the transportation of passengers, that is available. If it is used for further supply of the same line of business, then ITC is eligible. And if in case of driving schools and training schools, in that case also ITC is available. So this is with respect to motor vehicles. With respect to B, it prescribes the list of services where ITC is not eligible. So it talks about food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery. And with respect to motor vehicles, it is leasing, renting, or hiring of motor vehicles, vessels or aircrafts referred to in clause A and AA. Life insurance, health insurance, and in case of a club, health and fitness center, the membership pertaining to that, and the travel benefits extended to the employees. In all of this, if there is an obligation for an employer to provide these services to the employer under any of the law, then for that, ITC is eligible. So this is prescribed under that. So with respect to C and D, it talks about the construction, ITC pertaining to the construction of an immovable property. So C talks about the works contact services, and D talks about the construction of an immovable property. So as discussed in the last week, where we can split this into three parts, where the works contact services, when supplied for the construction of an immovable property, we can keep it as in one part, other than plant and machinery, because for the plant and machinery, ITC is eligible, and the definition of plant and machinery is also prescribed, except where it is an input service for further supply of works contact. Say if I'm a works contact service provider, if I'm availing the service of another subcontractor, then ITC is eligible under for that. But if the works contact services, it is used for the construction of immovable property, then ITC is blocked for that. This is with respect to works contact services. For the construction of immovable property, say if any goods or services, if it is utilized for the construction of immovable property, like either on his own account, when it is used both for the construction, for the construction of immovable property during the course of furtherance of business also, then in that case is also for the construction for the immovable property, ITC is blocked. for these two clauses, we have last session we have taken up in detail the rulings that was given in favor as well as that was in against say for movable properties constructed, and if there are certain additions to the building, what will be the stand or how we can take about that. So until this, we had a discussion in the last two sessions relating to the block the credit. So going forward, today we'll have a discussion on the remaining clauses. So the clause E talks about goods or services or both on which tax has been paid under section 10. So it tells that if tax is paid under section 10, ITC is blocked. So what is section 10? We have to see here. So section 10 generally talks about the composition levy. So who are all for composition levy? Generally, there is a threshold limit. So if you are within that threshold limit, you can opt this composition levy. Basically, as we all know, composition scheme is generally for the benefit of a small taxpayers because it is an easy compliance, and you can discharge the tax also at the reduced rates. So the composition levy for introduced for that. So if your turnover does not exceed the threshold limit that has been prescribed, then then you can avail the composition levy. So the aggregate turnover that is mentioned for the goods is if your annual aggregate turnover is less than 1.5 crores, then you can opt for composition scheme. And for the service providers, the aggregate annual turnover has to be less than 50 lakhs. Both of these have been with effect from 1st of April 2019 because earlier to this, the limit was different. It was 1 crore and all. But in certain cases, say if I'm a manufacturer or a trader, but also if I'm supplying services, to what extent I can supply services so that I can avail the composition scheme. So that is also prescribed in the section. So it tells that if I'm a manufacturer or a trader, but if I can supply services to the extent of 10% of the turnover or 5 lakh, whichever is higher. If it is within this limit, then I can avail the composition levy. So under this composition scheme, the tax can be discharged at the reduced rates. So these rates have been prescribed. So if I'm a manufacturer, the GST rate would be 2% of the turnover. If I'm a trader, I have to discharge tax at the rate of 1% of the turnover. Say if I'm discharging, if I'm having a restaurant and I'm providing restaurant services, restaurant, we all know that it comes under the service category. So if I'm providing restaurant services, then I'll have to discharge at 5% of the turnover. And for others, that is providing services or mixed services, that has to be 6% of turnover, that is 3% each. So this is with respect to GST rate, those who are availing the composition scheme. So in this composition scheme, there are a list of persons who cannot take the benefit of this composition scheme. So it mainly talks about if I'm supplying the goods that are exempt under GST, then I will not be able to go for composition scheme. But say if I'm engaged in the interstate supply of goods, and that too, if I'm engaged in the interstate outward supply of goods, I'll not be eligible. Say for an example, if I'm a manufacturer, but for the with respect to interstate, I'm purchasing from, say if I'm a manufacturer in Tamil Nadu, but I'm purchasing goods for the manufacturer from Kerala. In this case, there is only interstate purchase of goods, but I sell the goods within the Tamil Nadu. So there is only interstate. There is no interstate with respect to outward supply. In this case, I'll be eligible to opt for composition scheme. So the section prohibits only the outward supply of goods and services if it is interstate. And for persons who are e-commerce operator who collects tax under section 52, that is TCS and 52, cannot opt for composition scheme. And if you're a non-taxable, non-resident taxable person or casual taxable person, the composition scheme you're not eligible for the composition scheme. And in this, there are a list of goods also for which you cannot go for composition scheme. Say if you're a manufacturer for tobacco and related products, then that is prohibited. And if it is manufactured for an ice cream or other edible ice, then also composition scheme you cannot avail. So with respect to 17.5, with respect to composition scheme under section 10, So if you are paying tax under section 10, you'll not be eligible to avail the ITC, and that comes under blocked. So this is with respect to 17.5E. So going forward with respect to 17.5F. So this basically talks about non-resident taxable person. That is, if there is a non-resident taxable person, he is purchasing goods or he's availing services, then he'll not be eligible to avail the ITC. So that comes under blocked credit. So let's see who is the non-resident taxable person. So as the definition goes, the non-resident taxable person is a person like who occasionally undertakes the transaction. Say there is a non-resident, but he very occasionally only he supplies the goods in India, say for an example. Then in that case, he'll be considered as a non-resident taxable person, and moreover, he'll not be having any fixed place of business or residence in India. So if all these conditions are satisfied, it becomes a non-resident taxable person. In case of a non-resident taxable person, suppose you want to supply any goods and services in our country, that is in India, you'll have to apply registration at least 5 days prior to the commencement of the business. And in that case also, you'll have to pay tax in advance on a presumption basis. That is, you'll have to estimate how much of the liability that you'll be incurring, and based on that, you'll have to deposit tax in advance. That will get credited in your electronic cash ledger, and from that you can utilize it towards the payment of your liability. So once this validity expires also, you can further extend the validity period in case of a non-resident taxable person. So I've taken an example. So in this case, if you see, there is a company called the Green Company from USA. They wanted to sell this high-tech gadgets in India. So it is a one-time deal for them. So they've appointed an agent named Mr. A to carry out all the compliance related formalities. So in this case, Mr. A, what he has to do is he has to register this non-resident taxable person with his own PAN number, and he has to pay advance tax. For this, the Green Company has to give their proof as well. But based on this authorized signatory's PAN, he'll have to get registered and pay tax accordingly. So once the transaction is completed, he has to file the GST returns, and he has to discharge all of the taxes. So this is with respect to non-resident taxable person. So suppose if you're a non-resident taxable person, then ITC is blocked, then you'll not be able to claim ITC for the same. Going forward under this F, there was an insertion of new clause FA. So it particularly talks about ITC on CSR expenditure, that is corporate social revenue expenditure. So this is basically it comes under it comes as an obligation under the Companies Act. Say if your threshold limits exceed, if your turnover or if there is a pertinent limit for this CSR. So if it exceeds a threshold limit, then you'll have to incur this CSR expenditure mandatory. So if cross that limit, then you'll be incurring this CSR. So if there is any input for that or any input service pertaining to that, then that ITC is blocked. This has been introduced with effect from 1st of October 2023. Why this was mainly inserted was there was always divergent views on this. So if you see the basic advanced rulings for this, if you see in case of Uttar Pradesh itself, there were two divergent views. In the case of the Varikesh Sugar, they held that ITC pertaining to CSR expenditure is allowable. But in context, the same UP government itself, UPAR itself, in case of Shriram Pistons and Drinks, they held that ITC on CSR expenditure is not allowed. Following that, they were this Kerala AR as well. So in the case of Polycab Bias Limited, CSR expenditure ITC was disallowed, telling that those were merely gifts. Similarly, in case of Gujarat AR as well, and the CSR activities were not even considered as a normal course of the business, and thus ITC is ineligible. So based on that, if you see, there is always a divergent views whether the expenditure incurred towards the corporate social responsibility is eligible for ITC or not. So to put an end to this, the government has introduced SFA, where it tells that ITC, if it is pertaining to CSR expenditure, then that ITC is completely blocked. going forward to 17.5G, so where it tells that if any goods and services if it is used for any personal consumption, that ITC is ineligible. So as we all know that if any goods, if it is purchased only for personal consumption, then ITC is eligible. And if any goods, if it is used partly for personal consumption and partly for business consumption, then we'll have to take this rule of common credit reversal, and we'll have to avail ITC based on that. So I've taken an example, say in this case of Mrs. Kiara Enterprise, they are engaged in the selling of this air cooler. Suppose for an example, they purchased 50 coolers for 2,50,000. That is during the summer period. So what would have happened was this one cooler, they would have used it for personal purposes, and the remaining cooler they would have held it for business purposes. Out of that 50, 49 they would have sold to an outsiders, that is the customers. But that one cooler they would have used for their personal use, and that too for the summer period of 4 months. And after that, they would have sold this cooler to another customer at a discounted price. So in this case, how this ITC will be, if ITC is eligible or not pertaining to this one cooler becomes a question. So if you see that the one cooler, if it is only when it is used for to the extent of business, only for that, we'll have to apply this common credit formula, and we can avail ITC based on that. And for the balance 49, as it is used for the business purposes, you can avail ITC on that. So this is a small example I've taken to understand this personal consumption. So I've taken up an advanced ruling as well. So if you see, this is basically Tamil Nadu AR ruling. That is in case of Chennai Port Trust. So I'll tell you what is exactly happened. So this Chennai Port Trust is basically they're engaged in the port services. So in this case, what would have happened was this port trust, they have this in-house hospital for providing this free medical services and any of the medicines to all of these employees, all of these retired people, pensioners, and their dependents and all, because it comes as an obligation that it is mandated for them under Major Ports Act. So as it is mandated by that, the Chennai Port Trust, they have an in-house hospital. So what they wanted to exactly know was for provision of this, all of this services of medicines and this treatment, basically they need all of this equipments, that is this diagnostic equipment or any of the medical equipments and all. So for all of this, whether ITC is eligible or not was their question. So if you see the question that they would have asked was all of this medical and diagnostic equipments, medical apparatus and instruments, and if there is any repair services to that equipment also, whether ITC pertaining to that can be availed or not was the question that was put forth. So what the advanced ruling they would have come to a conclusion is this medical care is mandatory as per the regulations. That is, as I told you earlier, this as per the Major Ports Act, this medical, that is, they have to provide this medical services to all of their employees or pensioners or whomsoever. So it is provided to them, it is provided to the employees for their personal use, and it is not for the personal consumption of the applicant, that is Chennai Port Trust. This was the argument that they would have put forth. They would have told that if the goods are used for personal consumption, then ITC is ineligible. But in this case, the applicant is not using the goods for personal consumption. Rather, their employees or their whomsoever gets benefit from them, they would be treating it as personal consumption. So since the applicant, that is the Chennai Port Trust, covers the entire cost, the medicines are not covered under personal consumption would be their stand. That is the applicant the Chennai Port Trust. But the ruling came up to tell that they are not entitled to input tax credit, because they deem that if medicines is used by the employees and the dependent as a personal consumption, that will be ineligible for input tax credit. So with this ruling, we can come to a conclusion that even though in this case it is mandated in the Ports Act, even though it is not personally consumed by the applicant, it is used for the personal consumption of an employee. Even though in that case, the ITC is still eligible because it is used for the personal consumption. So we'll have to be careful in treating the goods that is used for personal consumption. So this is with respect to personal consumption. So going forward, this 17.5H talks about the goods that is if it is lost or if it is stolen or if it's destroyed or if it's written off or disposed of by way of any gifts or free samples. So the section clearly tells about this. So if it's any goods, as we all know, if there is any fire accident or if it's any if it is destroyed or if you are giving away any of the goods as a gift or a free sample, straight away it is covered under the 17.5H and it is completely blocked. But for this also we have certain advanced ruling where there is contradictory ruling telling for the both if it is eligible or ineligible. This is with respect to this promotional activities or advertisement activities. So if there is any business, they would normally incur this promotional expenses or this business advertisement cost and all. So for that, we'll have to see whether it is covered under this gift or free samples or not. For that, I've taken this AAR of Maharashtra. So in this case, if you see, the applicant is generally is engaged in the pharmaceutical business. So in this, the applicant generally he incurs all of this marketing and distribution expenses. So as to promote their businesses. So what they do is normally they give out some promotional schemes. Based on that schemes, if they are suppliers, they would have this reward points. Say if so much of goods is sold, they would have this reward points. Based on this reward points, they'll have this scheme such as if this reward points is crossed so much, then you can earn a free trip to Singapore, or you can earn a brand watch like that. So they would have come out with promotional schemes like that to promote their brands or products. And apart from that, they would also send this. You have this diary, notepad, these keychains and all with their brand embossed on that, and they send it to their brand reminders. That is to all of these doctors or the distributors. They normally send this. So in this case, they wanted to know whether this promotional scheme expenses, whether for that ITC is eligible or not. And for this brand reminders, they send this all of this goods, right? This pens and keychains and all. And if for this, whether ITC is eligible or not. This was a question that was put forth. So first it went on to the Advanced Ruling Authority. The answer was both negative for both the questions, whether ITC is available of the GST paid on expenses incurred towards promotional scheme. The answer is negative, you cannot claim ITC. And for the GST paid on expenses towards the promotion schemes given as a brand reminders, as I said, the goods that is embossed with their product logo or whatsoever, in that case also ITC is not eligible was the ruling given. So what would have happened was they went on an appeal instantly. So the appellate authority. So in this case, what are the argument that they would have put forth was, even though it is for promotional activities, and this promotional activities is considered as it is in the course of the business or for the furtherance of business. Say for any business, you take up this promotional activities only to increase the sales or to increase your revenue and so on. So when you send this brand embossed products also, it obviously becomes as an advertisement tool for you, and because you send it to the brand reminders and it have as an advertisement. So in both of this cases, there is obviously an intention to increase the business revenue, or it is pertaining to the business as well. So in this case also, I would have quoted this circular 92/11/2019, where the circular entirely talks about this gifts or free samples, discount and all of that. So they would have taken reference of this circular. So in this circular, if you see, they would have clearly mentioned that ITC for input or input services or even for capital goods, if it is relating to the supply of goods or if it is in the course or furtherance of the business, in that case, ITC is eligible. So what this appellant, they would have taken the reference of this circular and they would have told that it is in course of their businesses, and they would have mentioned that it is in marketing or in advertisement too. And so as it is in the course of their business, ITC is eligible was the argument that they put forth. So based on this, what the authority would have found out was there is they would have come out a conclusion that this all of this promotional or sales target expenses incurred was merely for the business to expand or to increase their sales. So this is purely a commercial transaction, and there is a commercial intention. And if you see, there will be an Supreme Court judgment where the definition of a gift will be given, and that definition of gift is also not satisfied here. And even though if this embossed all of this keychains and all, if it is given to the doctors or distributors, it is given only with a motive to increase their businesses, and which is purely commercial in nature. So they would have come to a conclusion basically generally that it is purely a commercial transaction and there is a commercial intention. So they would have told that it is a commercial transaction, and based on that ITC is eligible. But what would have happened was, in the panel of members, one of the members, that is SGST, would have upheld the order of AR, telling that it is ineligible, and the other member would have set aside the order in favor of an applicant, telling it is eligible. So there are divergent views in this appeal itself. So even though if it is negative, that is ITC is ineligible or eligible, it all depends on the facts of the cases and how we are treating about it. So if you see, there is another advanced ruling with Tamil Nadu, that is the GRB, GRB Dairy Foods. As you all know that GRB is generally engaged in the manufacturing supply of ghee and related products. They have various retail stores across the countries. So they wanted to expand their market share, and thus they would have launched this sales promotional offer to enhance their products. So as we've seen in the earlier case, the same comes here as well. They would have given this sales promotional targets or any reward points. Based on the reward points, they would have this promotional scheme called as buy and fly. See, if you're crossing with so much of the reward points, then you can go on a trip to any other country like that. So if in that cases, whether the inputs or input services incurred by the applicant to implement the promotional scheme is eligible for ITC was the question that they put forth. So in that case, the AR would come out that ITC is not eligible. So if you see in this, they would have gone on and appeal before the advanced ruling authority. So in that also, they would have they would have put forth their point. So they will be telling that the advanced ruling authority has completely ignored that it is purely contractual agreement. And also, if you see the MRP of the products, all of this sales or advertisement expenses would be included in the MRP of the product. That is, advertisement in the sale promotion cost would be included in the product itself. So this does not fall under the gift, and so the ITC is eligible was the major point that they would hold on to, or the point that they would have argued before the court. So in this, but even though they were cases that we have discussed earlier, where even if it was used for commercial purposes or if there is any contractual agreement, in this case, they would have particularly declared that it is not eligible to avail the ITC, because as you see, the gift or reward, even though if it is given for a sales promotion, that does not even qualify as inputs, because when there is no GST on the disposal, and the input that is being taken for the sales promotion does not become inputs. So basically, when it is not even inputs, you cannot claim input tax on that. So, and this is moreover, it is a reward. So it is not even eligible for the ITC. So this was a judgment they would have given. So the advanced ruling authority, they would have told that the appeal is dismissed, and whatever AR and sold, that seems fine. So if you see this, in case of this additional expenses, there is divergent views. There is ruling telling that it is eligible, and there is a ruling telling that it is not eligible as well. So this is with respect to 17.5H. I've taken up this advanced ruling just to get a clarity on how does it go very practically, or how we incur it in the normal course of the business. So going on to the next, so this is any tax paid in accordance with the provisions of section 74, 129 and 130. So this is basically the 74 section, as we all know, it is basically when there's a suppression of facts. That is to say, if there is any willful suppression of facts, this 74 gets attracted, and this, as we all see, the notices and orders comes under 74. So if there is any tax paid under section 74, you cannot take ITC on that. With respect to section 129 and 130, it talks about the conveyance in transit, that is during the movement of goods. So when there is a detention or a seizure, that comes under section 129, and 130 talks about confiscation of goods. So whenever where there is any tax paid in this section, that is 74 or 129 and 130, then you cannot claim ITC on that. So this is with respect to 17.5i. So for this, I could tell an example of if there is in 74, if you are receiving a notice telling that RCM liability is not paid, and you're paying RCM on that. If generally we take a stand that if RCM liability is paid, we can take a credit on that. But if you have received notice under section 74 and you have paid an RCM liability, you cannot take credit because it is blocked in a 17.5i. So based on this, if there is any tax paid under 74, 129 and 130, the ITC is clearly ineligible, and it will not be able to avail the ITC. So this is all with respect to section 17.5. So we have discussed in detail right from the 2 weeks back. We have held on 3 of the sessions where we wanted to explain you in detail how does this 17.5 works. So in the last session also, I would have shown you this notices, like how we are receiving notices. So this is with pertaining to blocked credits with this building electrical equipments and all. So this is with respect to electrical goods. This is with respect to this cement works contract, electrical goods and hardware. This is for the purchase of an immovable property. The same thing, because whenever 70 core is attracted, you get 100% of the tax. So that is with respect to notices. As we all know, this 74, the time limit has not expired, and still they can issue order notices under section 74 for 1819. This April 30th, the time is over for passing of an order, and going forward they'll be issuing notices and orders for 1920 and for the subsequent years. So keeping on this mind, if there is any blocked credit that you have availed, we'll advise you to reverse ITC along with an interest, because when you receive notices and after that, if you find out that you have availed an ITC which is blocked, then for that also interest will be approving till the date of reversal, and there are chances they would impose penalty as well, because they can issue orders under 74 as well. So they'll be issuing orders under 74, and then cost out of your pockets to pay the ITC interest and penalty. So if there is any guidance you require from our side relating to this, or for any matter relating to GST or notices, you can please contact us. If given the admin number and the supporting number. So if there is any question pertaining to this, you please post in the question and answer box. We'll be ready to answer. So going on to the questions, Mr. Aniruddhan, you've asked the question. In this regard to the availment of input tax on passenger vehicles more than 13 seats, the ITC is availed on output tax at 12% is to be paid here. Sir, so I'm assuming that you're telling availed ITC if it is more than 13 seats, whether should I discharge the output tax? Yes. So if even if you're availing ITC or not, if there is an output and there is a supply, then you should pay tax. Sir. With regard to construction of immovable property, if the work is done by a contractor, he can avail the input tax credit against his output tax on works. Yes, sir. With regard to construction, regards to works contract, if you're in the supply of works contract, you can avail ITC. I think during the last meeting of the GST Council, the composition dealers are allowed to e-commerce sales without doing interstate operations now. So we'll have to check on this. We'll check and get back. If you don't have the bill and EV bill and the bill was reflected in 2B and 2A, as a counterparty filed its returns, then how can we unblock the GST credit from the tax officer, as they have been blocked the sum amount from us? Sir, Mr. Shafi, I'm not able to get what you're exactly asking. Kindly repost the question, sir. Mr. Sasidaran Gopal Krishnan, when all promotional materials are like advertisements and for furtherance of a business, is it justifiable to deny credit for inputs for samples and other promotional materials? So, as I've said earlier, for this advertisement and for promotional expenses, it is always a debatable point whether we have to avail ITC or not. So, there is always a question of debate. So, if you're taking samples as another promotional materials, then that also comes as a question of debate. Is ITC available on building construction? Sir, pertaining to ITC and building construction, ITC is blocked, sir. You cannot avail the ITC. Mr. Prabhu has told us the session is super and he has learned so much from us. Thank you, sir. Thank you for that comment. If you've asked for the recorded sessions, so for the past two sessions, there has been some technical glitch. We'll definitely upload the recorded session in this YouTube on our YouTube syntax page. Kindly stay in touch. If you have any further queries relating to that, you can always contact us to the admin number or the support team, or you can even mail to us, the CEO@syntaxrclinic.com. We'll be ready to answer. Mr. Prabhu, you have also asked about the common credit reversal. So the common credit reversal is basically if you have this goods used for both personal purposes as well as the business purposes, and if we have any of the goods purchased and if we are utilizing for it taxable purposes and exempted purposes, we have this rule 42 and 43. Based on that, we have to segregate the ITC pertaining to all of this, and goods pertaining to the exempted or personal has to be reversed, and goods pertaining only for the business purposes has to be availed. For this, we'll have to go deep into the rule 42 and 43, sir. So we'll plan a session on that, wherein we'll explain in detail how this apportionment has to be done. So thank you, everyone. Many of you have posted. The session is really nice, and you have some of value addition from this session. Thank you so much, each and every attendees. Your valuable feedback matters a lot to us. So for the further upcoming webinars, if you want us to talk on a certain topic, please do let us know. And if there is any feedback relating to all of this webinar, we'll also welcoming to get that or accept that. So thank you, everyone. Thank you so much.